As you know, since we last spoke, we've currently been looking into Sheridan AV, and after some investigation, we can update you with any findings and recommendations from a review of elements of the control environment.
We've been looking at the management philosophy and operating style. We found that David Sheridan was a dominant manager. His main focus is on sales and not on the accounting department. After reviewing the interview with Margaret, a lot of what she says is hearsay. However, there are a few things which corroborate information that we have found elsewhere. She believes that David as a leader has too much of a laid-back attitude. This could create a control risk as it could impact on the quality of business procedures and accounting information. A new bonus scheme has been introduced by the company. This represents a significant portion of management's compensation. It's important for us to question the management to see if the scheme is reliant on the firm achieving aggressive targets for revenue. The 9 months accounts drafts have reported an increase in sales. This could present an inherent risk as there is a lot of focus placed on the sales target. This could also be seen as a fraud risk associated with the manipulation of revenue. The bonus scheme does not extend beyond the board of directors. Going forward, transactions and sales procedures need to be inspected. It could be appropriate to choose a lower 0.5% materiality due to the unclear wording of the bonus scheme because revenue could cause a significant risk to the audit. Our next concern is David's lack of integrity. He focuses purely on sales and delegates responsibility. This is a control risk as it does not give confidence that he is an ethical leader. Although James Clark, the finance director, has declared a complete trust in David Sheridan, it is unclear whether this can be enough reassurance due to their friendship outside of the business. Although it seems normal that the two senior colleagues would trust one another, I think we need to remain wary of the risk of blind trust being placed in senior leadership. James Clark's office is far away from the rest of the accounting team. He didn't want to be bothered by any questions. This presents a control risk as the lack of support junior accounting staff may be receiving due to his absence could lead to errors. We looked into communication and noticed that the interview with Leanne Sheridan was cut short, and therefore we have not been able to obtain what she does in the business. Leanne hasn't been to any board meetings, so we question whether she can carry out her duties as an effective company secretary. Going forward, we will further inquire with management about her involvement with the firm, as this could be an inherent risk because she may only be on the payroll to simply help the company avoid additional tax. We looked into information systems and found the company prepares its statements in accordance with the International Financial Reporting Standards and Companies Act 2006. We can use this as a guidance to ensure that the accounting information is produced correctly. The current manual information systems leave a greater chance for error to occur. This informal nature presents a control risk which may lead to poor accounting decisions being made. Section 386 of the Companies Act states that every company must keep adequate accounting records. The company should be able to show and explain any transactions. A technical error referred to at the meeting on the 29th of September is still ongoing. This risk could affect the adequacy of the accounting records. We believe it is important to complete additional audit procedures to ensure that all information is complete. This will be as well as the usual tests for existence and accuracy. In addition, company information is only kept for 2 years. However, Section 388 of the Companies Act states that a private company should keep accounting records for a minimum of 3 years. We need to see if this will lead to insufficient audit evidence. David has assigned a lot of authority and responsibility to Rosie Hendricks, the accounts manager. It raises concern that there is little in the way of segregation of duties, which raises the risk that controls could be easily overridden. We have seen also that there is a confusion between employees and the managers due to the hierarchical structure. Rosie has never trained Jenna on spreadsheets, and Jenna is always behind with her work, and Kaylee is always short of work. We will observe the company's payroll as Rosie has responsibility in authorising this. We will also need to ask Rosie why she hasn't delegated any responsibilities to Jenna and Kaylee. We looked into the human resources policies and practices, and after reviewing the interview with Rosie, it shows the company are breaching laws and seriously overworking their staff. Jenna Jackson has even asked for a pay rise as she feels overworked, and Kaylee Jones has asked to go part-time. These requests were both declined, which could lead to claims of unfair treatment. Overwork of staff presents a control risk as it increases the likeliness of fraud and error. The directors under the Companies Act should be implementing controls which prevent or detect and correct fraud and error. However, this is not currently being done, and these risks will need to be addressed in the audit documentation. We recommend that to avoid certain risks, some issues need to be addressed. These include the bonus scheme, management accounts, hostile takeovers, and the expansion into Spain. The possible expansion into Spain may expose them to additional inherent risks. Spain currently has a poor economic climate, and it appears they have done little research into the expansion. However, this is likely to only impact the business in subsequent years. Also, Sheridan AV's main competitor are currently performing hostile takeovers on other PLCs in the industry. This poses an inherent risk due to the possibility of this if they become listed on the stock exchange. We finally think that the company would benefit from an internal audit team as it continues to grow and progress effectively. Rosie Hendricks agrees the extra help will be good for approving purchase invoices and money laundering schemes, especially with the ambiguity of the bonus scheme.
We have been looking into the auditing of the VAT and corporation tax balances for any concerns. Tax is an expense in the income statement and a liability in the statement of financial position. As tax is estimated in the income statement, we can use these amounts to see if the company are accurately calculating their tax figures. We will inquire further with Rosie and Mark in the finance department about these. If there is a significant difference between the estimated and actual tax figures, further calculations would be needed to see that the correct amount of tax is paid. We will seek expert advice from HMRC if there is a material misstatement to ensure that the difference is settled so that the company can avoid a fine for late payment. After investigation, we found that for the year ended the 31st of March 2020, Sheridan AV estimated their tax correctly. For the year ended the 31st of March 2021, their estimation was incorrect by £10. Because the difference is so immaterial, a 10% material threshold has been chosen. If any figures exceed this, it can be investigated further. Over the 2 years, they've been good at estimating their taxes, making the company low risk in regards to tax. VAT is a consumption tax placed on a product whenever value is added at each stage of the supply chain. Sheridan AV is likely to pay VAT in quarterly periods, therefore their deadline to make the payment to HMRC will be 1 month and 7 days after the period. We will check to see that they are charging the correct VAT rates and are including the necessary figures in their calculations such as charges and expenses. We will also check that the VAT deduction claims relating to taxable activities are exempt. This will be monitored by checking records to make sure invoices are displaying VAT registration numbers along with random checks to make sure VAT calculations are correct. Finally, we will check VAT input and output trails to verify that sale and purchase transactions align with the number and calculations on the VAT returns. To help us with any explanations of these figures, we'll speak to Margaret and Jenna. After investigation, we found that the 2021 VAT report, as of 31st of March, shows that the VAT payable is £71,886. However, the statement of financial position shows a tax figure of £67,734. We think this could be because the company is using cash accounting to account for their VAT and an accruals basis for the statement of financial position. This means that they are accounting for VAT from the day their customer pays and not the day the invoice is raised. We will look over the accounts to ensure this discrepancy isn't a sign of a bigger problem. Our tax services will help to save the company valuable time and effort, allowing them to focus on their business. Using the necessary expertise, we can help to prevent the company from incurring tax fines and charges that it doesn't have to. Seeking specialist advice from HMRC when necessary. Finally, we will provide advice on the expansion to Spain in regards to tax. They will need to decide whether VAT will be calculated in their home company or parent company. This will be determined by the expansion being a branch or a subsidiary. If they choose to open a subsidiary in Madrid, and this is not a separate legal entity, then they will need to follow UK tax regulations. Corporation tax paid at a rate of 19% is a direct tax imposed on the firm's income. Because Sheridan AV are a limited company, they will need to pay their corporation tax 9 months and 1 day after the tax year. They are eligible to deduct the cost of running their business from profit before tax and preparing the company accounts. Also, they can claim capital allowance if they buy assets such as equipment, machinery and business vehicles. We will look into these figures to ensure that they are correct, in particular the purchase of the warehouse and the bonus scheme. The company purchased plant and equipment which is exempt from VAT under Notice 742 and will be eligible for capital allowance. Capital allowances are treated as a trading expense and are deducted from trading profits. We will check that the warehouse bought is used for business use. If this is not the case, then it wouldn't be entitled to capital allowance. The warehouse will be grouped into the special rate pool as it is a lifelong asset. Since the 1st of April 2019, companies are entitled to deduct the first £1 million spent on expenditure of plant and machinery from profit before tax. The The building's worth is £750,000, so we will check that the figure deducted for annual investment allowance aligns with the figure for purchasing the warehouse. The retail shop fittings bought on the 6th of October 2020, costing £73,056, could potentially be eligible for capital allowance as an integral feature. We will also check that any additions are added correctly to the pool at cost, and any disposals are subtracted from the pool at the lower of sale proceeds or cost. Since the 1st of October 2014, up to £3,600 per employee's bonus payment can be exempt from corporation tax. This raises a concern as Leanne may not be a real employee, therefore her bonus shouldn't be exempt. We will inquire with Rosie the figure which has been exempt from corporation tax, and in particular, Leanne's bonus figure. If Leanne is not a real employee, then we will identify whether her bonus is a material figure, as this would mean that the corporation tax figure is too low and will need to be altered. We have identified that the bonus scheme is not in writing, therefore it may be tricky for Rosie to provide us figures. A concrete wording needs to be put in place so this can be further investigated if necessary. If there's anything you want to hear further about Graham, then we'd be happy to go into more detail.